This week on Generating Alpha, I sat down with Yoni Assia, co-founder and CEO of eToro, a social investment platform with over 35 million users and more than $1 trillion in facilitated volume. Yoni grew up in Tel Aviv, served in an elite IDF intelligence unit, and launched eToro in 2007 with his brother Ronen. The platform pioneered social trading, giving ordinary people the ability to automatically copy successful investors. In 2010, eToro launched CopyTrader. In 2012, Yoni was co-authoring papers on blockchain alongside Vitalik Buterin before Ethereum even existed. Today, eToro is valued at over $2.5 billion and has been a driving force behind legacy brokers eliminating commissions. In our conversation, we covered the philosophy behind social trading, building with his brother for nearly 2 decades, his early work in crypto, and his view on the future. If you enjoy this episode, please follow the podcast and rate it 5 stars on Spotify, subscribe on YouTube, and share it to anyone who you think might find it valuable. I really enjoy speaking to Yoni, and I hope you guys enjoyed listening. Thank you. Yoni, thanks for joining me. Really appreciate it.
Thank you very much. Thank you for having me.
Well, I want to start where I always do, the beginning. Your father, if I'm correct, founded a company called Magic Software. Your mother runs a copyright law firm. Um, your dad would stop the car outside the bank to look at stock quotes when you were growing up and discuss them with you. I'm very interested. Tell me about growing up in that household. What was young Yoni like?
As you know, I started the company together with my older brother. So it's always interesting to get like the perspectives of two brothers who grew in the same place where totally like admired my father and his work and joined. I think I started doing presentations for Magic Software when I was very young, like PowerPoints and CAD and 3D stuff. I started programming on Magic when I was very young. And I always knew I wanted to be CEO, founder, and build a company. My brother went into art, so I did masters in computer sciences. My brother did eventually masters in the Royal College of Art and Industrial Design. And like our perspective was very different growing in the household where I thought that business was super, super interesting, trying to replicate it. And sometimes Ronen actually saw sort of the stress and how intimidating business is. And that actually led to the invention eventually of eToro, because he used to tell me, I have an accountant hobby since I was 13. He used to look at what I do and say, like, you're sitting with multiple screens, charts, Excels. You bring the paper with the stock quotes every evening. And I look at what you do, and it just looks the most horrible user experience. And that's sort of where it clicked. And we said, okay, let's build an investment platform, a trading platform where we simplify the user experience and make it easier to open the global markets for everyone to trade and invest in a simple and transparent way.
And you told me you were kind of doing this kind of stuff from the age of even 13. What were those early experiences like during your teenage years? Kind of getting into business and being
So
entrepreneurial.
no, so 13 was less entrepreneurial. It was more about when I started trading.
Hmm.
And I remember like my first stock trade, I always say like 3 big aha moments, now 4 big aha moments, but now maybe accelerating my aha moments, but was like figuring out the internet very young, right? So I was not born into the internet. And then I remember like downloading Simpsons episodes in text back in the 90s. I feel so old now. And then my first trade, when I did it and I realized like I just clicked something on the internet and it changed the price of the stock. And I was like, whoa, I'm like, a young kid with access to, a very small account. But when I swipe the bid ask in the book, it actually changes the price in the stock market. So that for me was like an aha moment of how everything is connected in capital markets and the money markets. And then the third and the fourth would come much later on, which is Bitcoin at early beginnings in 2010. And now absolutely mind blown by AI and just playing with my open claw the entire last week, which is quite crazy.
And if I'm correct, before eToro, you founded a business called CD Ride. Tell me about that and how that kind of led to eToro. What was the idea behind that business and how did it ultimately lead to you starting eToro?
So CD Ride was more about taking that entrepreneurship step. So
Mhm.
I was a programmer in the IDF. I already sort of learned to launch and ship code and manage wide scale projects. And then a couple of colleagues of mine from the Army unit basically told me, hey, we're building this business. Do you want to join us as the VP
Yeah.
R&D, as the basically who runs the software? And we set up that business actually uh, in my parents' basement. So they were older. We were five partners. Four of them were still with their day jobs. So I was actually the only one sort of full time on it, and I was in charge of developing both the hardware, an actual computer. Today, you would probably do this with a chip, a much simpler one, but an actual computer, a hardened computer that we installed on a roller coaster, connected to a camera that's hardened to go through weathers and then the roller coaster would go and basically take a video of your entire ride. And when you go down, there was like a setup with servers where the video has been sent in Wi-Fi to those servers with screens showing your entire ride edited in video. So that was my first startup. I actually joined it as a co-founder and the development manager just out of the army when I was about 21. And we eventually, it was really building hardware. I was spending my summers in places like Paramount and Universal and Wonderland in Canada, which was freezing, basically in the booth debugging hardware, software system, taking photos of people.
At that point, did you realize that was not what you wanted to do, or did you realize how did you get to eToro from there?
So one of my conclusions, which might change in the future now that everything is sort of opening up and suddenly software is no longer a bottleneck, is that my conclusion was two things, two like key learnings was the business plan, in my point of view, simply didn't connect, right? So I told my partners, listen, we're spending a ton amount of money on a system that the parks are not willing to pay for. And I told them we're never going to break even on these installations. We're just spending money. And they were like, no, in 2 years, we'll actually recoup the funds. And I tried to sort of minimize the costs and eventually came to sort of a disagreement on the business plan. That's one. And I learned a lot of business planning and projections and excelling out of that. And the second was like, I really didn't like the hardware part. So I remember we ordered something like 50 Wi-Fi chips. This is like a form factor that I don't know if exists yet today, still today. And then the firmware on the Wi-Fi chip changed. The entire software broke, like delays of like a month and a half to the process. So this was during my master's in computer sciences. I was like, okay, I want to deal only with software
Yeah.
from now on. And I actually knew what software I wanted to deal with because my first degree seminar was in basically the domain of finding patterns in capital markets based on physics. So I always knew I had this passion for the intersection of finance and technology. And my master's in computer sciences final work was how do you visualize on what's called today heat maps. Almost didn't exist there yet, except sort of in financial, in like articles, academic articles. But how do you present the stock market and financial heat maps was my seminar on visualizing. And when I started talking to my brother, this was 26, we were both actually thinking of the same thing at the same time. So I was thinking of it more from a trader point of view, and my brother actually just did a work for Bloomberg where he was designing the Bloomberg screens for Bloomberg. And because I know you probably know how a Bloomberg terminal looks
Yeah.
like. And by the way, it still looks exactly the same today as it did 18 years ago. And what was interesting is that at the end, his conclusion was financial institutions like Bloomberg, like banks, don't really want to improve the user experience because something about the complexity and sort of ugliness of that software is what makes it attractive to professional traders and investors and sort of pushes the retail investors out of it, right? So that was like our 2006 conclusion was actually everybody's against retail investors being in the market from how they're developing software. By the way, that still exists today as a paradigm in most financial institutions. Like they don't want you to log in every day to your app,
Why
right?
is that?
Well, there's an old notion which comes from actually like human capital, right? Which is we don't want you to come to our bank every day. We really want you to come to our bank once every 6 months or 12 months because it costs us money when you come to the bank.
Mhm.
And if you came to the bank, we're probably in a problem because you came to the bank with a problem or you're leaving us. And that state of mind actually sort of resonated to how most financial institutions worldwide still think about the interaction of a customer and software. So even the big banks today, wealth management, I'm talking about like, the Goldmans and Cities, UBS, like really large companies, they have a really, really bad experience in their app. Sometimes you can't actually execute in the app at all. Like the logic in wealth management is we don't want the customer to actually make decisions in the app because then he's not reliant on us and he might actually sort of start being more expert and won't need us. So it's like very old notions that I think right now a lot of fintechs are breaking those notions. And fintech, when we started eToro, we had constant arguments in the board, not debates, but with Israelis it always sounds like arguments. Are we a tech company or a financial institution, right? This was before the term fintech existed. And we had that until like probably 2013, 14, when suddenly, another fintech, and people started calling this fintech. So I think this entire industry is about changing the paradigm to we want our customers to actually engage with our software every day and we want them to feel as they're hooked into the platform and use more and more of our products directly on the app. And we believe that a better engagement and an enjoyable experience with the app would lead to a higher retention rate and a higher engagement of customers with eToro.
And is the vision for eToro to be only for a specific customer function, such as if they want to trade, I don't know, a certain type of equity, or if they want to trade crypto or something, or is it more for them it to be their one-stop shop at one point for all of their
We're
investments?
definitely on the path to building an investment super app. So we cover today stock markets from 25 different capital markets. We're the only neo brokerage actually covering 25 different capital markets, more similar to Interactive Broker than to a Robinhood. We cover bank accounts, so multi-currency accounts, dollars, euros, pounds, Australian dollars, where you can actually send and receive payments and get a Visa debit card. So we're basically entering into that space of neo-banking for spending and for banking. And and sort of the core idea of eToro or the core mission is to help our customers connect with smart investors to increase their knowledge and wealth in capital markets. So we support derivatives, we support about 200 crypto assets, we support stocks from 25 different markets, options, futures. And the unique part of eToro, it's a social network where everybody can actually see the performance of each other. So you can trust each other because it's not like Reddit where you have no idea who you're talking to. You're talking to a person with a name, with his track record, with his open portfolio. You see everybody's performance. And then the unique part of eToro is the ability to copy them and copy our smart portfolios. So we have today 5,000 popular investors enrolled into our Pro Investor program. Some of them have mind-blowing results and sort of leads to how we started eToro. I have always believed in myself as a retail investor and that people that have talent and passion about capital markets don't need to work in a big bank or in a big investment house to actually generate returns. And that's what we're seeing in eToro. Our top pro investor has now $300 million copying him.
Well,
So he started as a retail investor in eToro. Now he has a 6-year track record with about 30% average return. Our second one has 12-year tenure in eToro. So he's been 12 years in eToro with a 29% average return and has $200 million copying him. And they're making money out of the fact that other people are copying them. So when we look at sort of the business in the 4 different parts, it's trading, because we believe in trading and we believe in active traders, and we believe that people should experience trading and over time decide whether it's for them or not. But trading is higher risk than investing. We believe everybody should invest in the markets, because over time, the S&P 500 and Nasdaq does much better than having your money in a bank deposit. And that's very, very clear. And nonetheless, most banks around the world, especially outside the US, would still very much push customers to be afraid of capital markets. Where in the US, that doesn't exist. Everybody believes in capital markets. In the rest of the world, you ask 10 Italians, do you believe you can make money in capital markets? 5 out of 10 will tell you, no, my father told me it's gambling. So that's investing, and the ability to see other people generating returns on the platform is a core part of that increasing belief to retail investors that you can generate returns in the markets. And of course, the capabilities of copying our top investors. So when you copy a top investor, you choose an amount of $1,000, click copy, it copies his entire portfolio into your portfolio. And every time they trade, it trades in your account at the same time, the same price, and the same proportion. And we have a chief investment office in eToro that created about 125 smart portfolios that basically capture almost every strategy of the people that you interviewed here. So from value investing, which I had the luck of meeting Warren Buffett, to fashion investing, which I had the luck of meeting Bernard Arnault, to actually copying people like Stanley Druckenmiller, copying his 13F, or investing in long-short momentum strategies, which are more similar to Stevie Cohen, 0.72, or Easy's Millennium. So the great thing about what we've built, it's basically a platform for retail investors to experience the entire range of self-directed investing, and investing in things that replicate mutual funds, active hedge funds, so ETFs, regular ETFs. We have thematics, so we find out what's interesting, and we basically build those thematics in within 24 hours, something happening in the market. We're going to launch a thematic around, we saw something that our users did yesterday. It's interesting. Now invest in a smart portfolio in nuclear energy.
And one thing I'm really interested on, if we could take a step back, is you founded eToro in 2007, if I'm correct, and then the financial crisis hit. And so must have been a really kind of interesting experience and informed how you see financial markets and how you ended up building out eToro. What was that like? What was that experience like? What did you learn? What did you come out of it knowing?
So first of all, I think I always say that the market corrections and crashes are actually very important to not only the cycle of markets, but the education of people in the markets. Like, the most important thing people need to understand is market cycles, and the markets don't always go up in a straight line. I had that experience in the dot-com bubble. That was, by the way, eventually after that, my seminar, my first degree was bubbles and bursts, and how they're basically completely unrelated to anything related to the underlying asset or to even humans. It was AI agents. I built an AI agents in, I think, 2003, who are actually running just one thing: look at the entire history of trading and decide whether you're buying or selling right now. It's called Minority Games, by the way, which is a fascinating article now to replicate. And you actually see that what it creates is that the markets go up, 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 up slowly, and then crush. Up, 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 up slowly, and then crash. And it's very interesting that AI agents with zero, there's no, like, all they're seeing is an asset and its price over time, and it acts like this, right? It's information theory. It's somehow physics or math. So first of all, I knew that experience because of the dot-com bubble. What really surprised me as a fintech entrepreneur very early on to fintech is how disconnected, like, banks and financials and financial reporting are from what I would expect back then, like real-time I expected like to find finance in a real-time space. So my financial reports are updated in real time. Everything always works in real time. And then I realized everything works in T+1 and T+2. Settlements are slow. You basically realize what you did with the banks only 2 days later when they send you basically an Excel spreadsheet. And when we had the crash, the other thing that amazed me and eventually led me to sort of my obsession around crypto is we actually saw the market sort of stop functioning. So in the global financial crisis, it's like somebody pulled the plug. You have these stories from the 90s where there's a crash and people don't answer the phone. By the way, that was the beginning of digital trading because basically the SEC said you have to have a way for people to execute. What I found out is the euro dollar, like the even most basic thing, which is currency trading that's supposed to trade 24/5, everything was shut down. Like the banks sort of pulled the plug for a while, and you waited to figure out whether the bank you're trading with is going to open in the next morning. You can't talk to anyone. The markets are shut down. And that led me to sort of say something is really broken in the system. This is a system that's supposed to be 24/7, always on. I know technology can be 24/7 because the internet is 24/7. This was already like, 12, 15 years after it's very obvious. And the financial system just, pauses at 5 p.m. or 7 p.m. and things just stop working. And that eventually, when I saw Bitcoin for the first time, I was like, this is how everything in finance should work. Like, we need to have like a shared blockchain, a shared ledger between everyone, and it should be working 24/7, and nobody can unplug from the system, their customers. So that led one to that. And second is to what we eventually built as our nonprofit called the Good Dollar Project, which is, it also represented, in my point of view, that something is broken not only in the tech stack of the financial ecosystem, but in the distribution of wealth in the financial system, which is, the people who got eventually screwed the most from the global financial crisis are the people who had the least, not the people who had the most. And then when I started sort of looking at it and reading throughout that time, I realized like it's all about how do you give out interest rates and how is interest rates supposed to be given. And I realized that actually it should be, in my view, like the opposite of what it is today. You should get less interest rate if you have more wealth. But in order to do that, you have to build a blockchain-based system or a completely transparent ecosystem where you have an identity that's connected into a ledger. So whoever gives the interest rate can actually give more to those who have less and less to those who have more.
And eToro is building this global network, if I'm correct, over 40 million users across 75 plus countries. But as you grow, I'm interested in where does size work with you and where does size work against you? Because obviously you're building a network, but then also in terms of if people are copying these massive portfolios, people are taking larger amounts of trade, there can be more slippage to be had or things like that. Where does size work with you and against you?
So I think generally our business is extremely scalable from a size perspective. So you can look at sort of some of the strategies of, for example, hedge funds sort of hit a ceiling because they're like, okay, we can generate 50% returns a year, but if we take on more money, we'll actually generate 40 or 30. You can look at sort of D. Shaw, which said, okay, we can make better 50, 70% a year on our quant trading, but we want to raise more money. Let's start investing in real estate and blend it, right? So I think in different trading strategies that are focused on generating alpha, you have sort of a cap to how much you can sort of raise. But when you think of companies like Interactive Brokers, when you think of companies like us, when people manage their own decisions, then there's no limit to scale because we can have 5,000 pro investors. They could be 10,000 tomorrow. Each of them can, with a 10,000, manage $10 million potentially. And $10 million is not a lot because there are already more than 10,000 ETFs in the market. And those ETFs are managed in a very certain way to things that we are developing in eToro, right? And when customers have that choice, then basically scale doesn't become an issue, and we can eventually aspire to have $1 trillion of assets in eToro.
And I'm interested because, as you mentioned, you built this business with your brother, Ronen, for nearly now 2 decades. It seems that he's more focused on the design front and you're more focused on the technical and like markets aspects. But as kind of a partnership, how do you make decisions when you two disagree?
Um, well, I generally say, we try to come to an agreement, like in many, many cases, good boards as well. And it's not only my brother, we're also a public company right now. I have a board. In that board, very smart people. So the founding family of the largest investment house in Israel, who manage about $140 billion, and one of the founding partners of Spark Capital, who's one of the best VCs in the US, Laura, who's an ex SEC chairwoman. So a lot of smart people are on your board, but you aspire to come to a board, and the same is with my brother, where sort of you talked it out and came to a conclusion that this is what needs to be done. And eventually, I'm the CEO, so I need to make sure that people sort of understand the risk, the potential. Sometimes it's okay for people to say, hey, I wouldn't do it. I don't think the cost benefit risk is worth it. But if you want to do it, do it. Just make sure that we know when and where to cut our costs.
And you talked about that kind of aha moment you had with Bitcoin at one point, where you saw it open 24/7, it's peer-to-peer, it's decentralized. How does Bitcoin and crypto factor into eToro, or how has it?
Well, we were very early to Bitcoin. We started buying Bitcoin at about $5, $10. I have those Mount Gox
Congrats.
screenshots. We transformed like $50 million in $50,000 into $50 million between 2012 to 2017. Unfortunately, sold it, but as the market grew. But it was pivotal to our growth because at 2017, we started the year with about 2% of our customers trading Bitcoin after we launched it in 2013. So for 4 years, nothing happened. And then in 2017, we added ETH when it was about $4 to the platform. And then we started adding more and more cryptos to the platform. At the beginning of the year, we opened about 200 funded accounts a day. At the peak of, I think it was December or November 2017, we opened 20,000 new funded accounts a day. So we had that explosion of growth, which forced us to really optimize and automate everything, preparing us later on to 2021 crypto rally with a perfect storm actually in 2021, having sort of both the meme stock rally and the crypto rally, which are very related because these are sort of generational thinking that you don't need, like the most detached type of investing you have from value investing, almost the opposite, right? So no intrinsic value, and still people are making money, and still people have their strategies. It's a higher risk because you don't have sort of the lower bound, where in value investing and DCF you always have that lower bound, right? So the concept of value investing is find the lower bound. If something trades below its lower bound, buy it, right? Growth investing is estimate the growth of the business, have your intuition around the 10 years growth. Can it be a double-digit growth for 10 years? And then the current value is irrelevant because the value of growth compounding in 10 years is so big, like current profitability doesn't matter. That's very, by the way, US, Amazon initially led thinking in the US, followed by Tesla. And then you have no intrinsic value investing, which is really about a hypothesis of what is the crowd going to do, and a hypothesis about market dynamics, which is much more related to trading than investing. But that's how the markets work.
Before we go back to the episode, I want to take a short break to talk about my sponsor, Row. The Generating Alpha podcast is presented by Row, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Row. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cash back, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Row is their team. They're obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Generating Alpha podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company cash with Row. Terms and conditions apply. To learn more, visit rho.co/generatingalpha. Row is a fintech, not a bank. Checking and card services provided by Webster Bank. Member FDIC. See reward terms for details. Thank you, and back to the episode. And in the past, even in the past 6 to 7 years, you've seen FTX, you've seen the Silicon Valley Bank crisis, you've seen meme coins, you've seen GameStop, you've seen COVID. What has all this, not only in the past 6, 7 years, but over the entire period of eToro, taught you about building a resilient business, one that can really weather through crisis and a real institution?
So a partner in Goldman, once told me that we're all in the business of selling risk, right? So everybody in finance, you're either buying risk or selling risk. Therefore, you're in the business of risk management. So first of all, I think I have very, very high regard to risk management. I think risk management is not about necessarily reducing risks. It's about managing risks. So our deputy CEO was the chief risk officer of the largest bank in Israel. So we brought in a lot of talent from risk management. And I think there's a lot of responsibility that sometimes people take too lightly when you manage other people's money, right? So when you manage other people's money as a fintech, you don't have, the ability to say, it's a bug. Sorry, you lost your money because of a bug, right? You can have outage in a social network. You can have bugs in software or in games. But when you think about money, I used to say it like consistently for at least the past 10 years when it became sort of clearer that we're managing large amounts of money, right? About $20 billion at the end of September, we're in eToro, is we need to remember that a person can come to eToro with $100, but another person can come to eToro with $1 million. And the person who comes with $1 million trades more frequently, uses us more. So any small glitch, anything that he sees that doesn't work means we lost a customer of $1 million, which is worth like 1,000 customers of $1,000. So you have to get to the 99.9999% of quality over time. And the same is true for risk management. Some risks in finance are sort of, you probably are familiar with the concept of 0 to 1 of Peter Thiel.
I am.
So you have 1 to 0 moments in finance that are not, by the way, unique, but they are very common, more common than people realize in finance. And you don't have that same 1 to 0 in other businesses. Other businesses, you have like 1 to 0.1, but a business can sort of survive and continue, roll over. In finance, if you did not manage as a 1 to 0 risk, you're done.
Yeah.
And because of that, you really have to have a good framework. We were very conservative, for example, in crypto compared to how early we were in crypto. A lot of people in crypto called me a crypto conservative because I started in Bitcoin and ETH, and I was very conservative about going towards like the 50 coins and 100 coins, like Dogecoin. We were lucky. We had a Doge a week before Elon went on Saturday Night Live. Because at the beginning I said, like, why would I add an asset which is a joke? And then I realized, across like the meme coin, this was, I think, 2021, right? I realized meme coin is not a joke, right? It sounds like a joke, but it's not actually a joke. It's a community coin, right? So, and when you have the richest person in the world as part of the community, it's definitely not a joke. So over time, I'd say we sort of understood the values of high risk products as well at some time, like in adding more coins. Now risk appetite, I would say, by the way, risk appetite also increases with generations, right? So if you speak to somebody, baby boomer, Gen X, Gen Y, and Gen Z would have a different appetite of risk. I'm very early to crypto, but I'm amazed on how many people are willing to have like a MetaMask account where if they lose their password, they're done. They lost all of their money. Right? I'm shocked how big this market is, which explains why things like, again, high risk, interesting things that historically would be frowned upon, like prediction markets or perpetuals, suddenly are becoming a reality. And when I speak to our customers who are younger, who are in their 20s versus 30s or 40s, you realize that the appetite to risk again scaled up, right?
Yeah.
So buying a creator coin on Base where he created something a week ago it's not an investment where you can rationalize it to somebody who followed Warren Buffett, but you can't deny the fact that it's interesting and people are interested in it. And the value it creates is also financial education, financial participation, which is, I think, the most important thing that happened in crypto. It became sort of a hook to bring in people into crypto markets and capital markets. And I'm a very big believer in Bitcoin and blockchain technology. But I think the fact that people are coming to trade even sort of the 1,000 coin and the 5,000 coin and the 10,000 coin, it's super interesting because it's a new form of capital formation, which actually forces now capital markets to copy crypto markets and for capital markets to transition on chain.
And when seeing this younger generation have more risk appetite, um, I mean, I've seen kind of this widespread people now gamble more, people now trade more, and kind of both sides of the spectrum. Do you think it's more calculated risk, or do you think it's more taking risk just because in this day and age, there's this whole thesis behind like these people can't make $1 million in this day and age and buy a home because everything's getting more expensive or whatever. So what kind of risk do you think it is? Or at least for like, yeah,
I think it's probably part of both,
yeah.
right? So Howard Lindzen, the founder of StockTwits, has this term that he likes to use called the degenerate economy. Or if you look at the concept of apes, which I am a proud board ape member, it's like it's an aping in, and you even look at the language, right? The language like suggests what it is, which is we're having fun and we're trying to make money while having fun. Now, the generational part here is super important because for an 18-year-old, a 22-year-old, betting all of your money, which might be $100,
Mhm.
which is your allowance, and losing them is unless you don't have money to get food, right? Which is then not
Yeah.
the case. But if it's your allowance and you can afford to lose it, I think it's more experience
Mhm.
than definitely investing, right? So
Yeah.
you're not risking a lot, right? You're risking $100 and you probably have an iPhone worth 10 times that,
Mhm.
right? So which means if you can buy an iPhone or buy clothes for $200, if you ask me what's more important, buying a shirt for a hoodie for $200 or spending those $200 learning how to trade high risk assets, I would tell my son to trade first before buying like physical goods or luxury items. And I am, by the way, my 15-year-old son is actively trading on a sub account of mine in eToro because, and by the way, he's very concerned about Bitcoin prices right now. He asked me like, are you allowing me to trade on leverage? I told him, listen, leverage is dangerous, but if you want to trade in leverage, just know you might lose your money. This Bitcoin was at $90,000 and you're going to come complaining that you lost your money. But if you want to learn how to trade and you can keep the trade open for a while, you're allowed to do it.
And you mentioned multiple times in this conversation, you mentioned being able to meet Warren Buffett. You spent 3 hours with him at a dinner, if I'm correct, in 2020. Tell me about that conversation. What you learned from him?
The conversation for me was like super important because I've been devoting my life until then to capital markets and to building eToro. And what was interesting is like, because I read also a lot of his books before meeting him. And then the conversation, this was Justin Sun, the founder of Tron, who bought the
Yeah.
dinner, and all the rest were people from the crypto industry, and everybody tried to convince him about Bitcoin. I basically knew before coming to the dinner that there's zero chance we're going to convince him about crypto and Bitcoin because I know his views on gold. And his views on gold are very famous. He says, it doesn't generate value. It doesn't mean it doesn't increase in value. It just means it doesn't generate value. And he believes in value investing, which is to look for value that generates value.
Mm-hmm.
But the most important thing is because he was repeating during dinner like things from his book. It's like I'm listening to somebody almost like gospel, right? So somebody reading you from his Bible, and his Bible is his books and his quotes. But it hit me like a hammer that everything that we've built in eToro is helping people figure out how to invest in the markets, generating double-digit returns, which Warren Buffett says it's simple to invest in the markets, right? You don't need to be a genius or of infrastructure. You just need to invest in what you know and understand how to learn financial reports of companies, understand their moat, and buy them when they're cheap. And hopefully you want to keep them forever unless something changed in your thesis, right? Which is a very simple worldview of investing. And the most important thing in investing is track record, right? So if you look at Buffett now, it's a 50-year track record. Mm-hmm. So I realized how big the eToro Pro Investor program is. And I actually came back, hired the next day after coming back a value investor professional to build a value investor club. And then we started tiering the entire Pro Investor between like growth, momentum, value investing, like really building the building blocks, realizing how important is building tenure in eToro, right? So when you look at somebody in eToro generating 29% returns on average for 12 years, it's better than maybe somebody with 32% for 6 years. If you're seeing somebody who generated 10 to 15% returns in 2022, significantly beating Nasdaq and S&P, that is a very important data point, right? And that's the moat of eToro. That moat of eToro is these are customers who've been with us for 5 years, 10 years, and we all learn as we go along. And the most important key learning, and this was me at roughly, I think, 40, this was just my 40th birthday, is if you'd asked me before, Yoni, are you yourself a great investor? I wouldn't give you like a straight answer. I would be like, maybe, and like when I spoke to him, I'm like, I'm doing this for the past like now 30 years. I've been in the markets. I've devoted more than 10,000 hours. I've been like the Michael Gadwell, 10,000 hours on capital markets. I'm passionate about it. And I do have a great 30% average track record on eToro as well. And it hit me that if that realization of me being able to answer only after my 40th birthday, are you a great investor? And today I'll say, yes, I'm a great investor. I've been doing this for 30 years. I know what I'm good at. I'm good at identifying what I call inevitable truths of things that are inevitably going to be the market 5 and 10 years from today. And I'm very good at identifying those very early on, whether it's crypto or tech stocks. That's my talent in capital markets. But also, I'm a very big believer in different strategies and diversification. So I'll want to invest in what I do, but also diversify everything I do, which is what I do on eToro. I copy 100 different people. I invest in about 50 different smart portfolios in eToro. By the way, my portfolio is public to diversify not from my own talent, but from my own flaws, right? But it also led me to understand how important it is if I'm the CEO of a network of extremely smart investors from 75 different countries who other people copy them, how important it is for us to tell them, guys, this is not luck. You're talented, invest in your talent, right? We're coaching basically people like being a great investor means you believe over time you're beating the markets, right? Which is, by the way, a different view I have than Buffett. I believe that a lot of our investors consistently beat the markets because of their talent. To be a great investor means you'll need to devote the 10,000 times. It's like being great in basketball. You need to have some infrastructure there. You might be a trader, you might be a long short trader, a momentum trader, an investor. But to consistently beat the markets, you need to have a very high sort of talent around something that you need eventually to believe in yourself. Because you can have all of the physics you want to be great in a sport. If you don't have a coach telling you you're actually good at this, you can be a number one, you're going to drop out from that sport, from doing that sport to actually just watching that sport, which is investing, which is also great.
And what are those inevitable truths that you think you're going to see play out in the next 5 to 10 years' time? Or some of those?
Right. The two big ones, which are very related to my business, is crypto. Everything is going to get tokenized. This is $100 trillion moving. I would say it's probably $400 trillion moving from basically one tech stack on the back end to a completely new 24/7 tech stack.
Mhm.
Now, this is inevitable. This is real estate, bonds, stocks, everything that's investable is going to move to, like we call it now blockchain-based asset. Maybe somebody calls it differently in the next 10 to 20 years. And that's inevitable, which it means companies in the fintech space need to sort of build their backend to support these assets, because whoever's there first, right? We were first to launch a lot of crypto assets like Dogecoin. We were first before Robinhood and Coinbase, and it generated like $5 million revenues a month in the first month we launched it post Elon in 2021, right? So a lot of in these things, you need to be first to actually capture an audience. The second one is, which is inevitable, is the transformation of wealth from older generations to younger generations, which means on the front end, now leave the back end, right? Digital assets is on the back end. On the front end, a consumer doesn't really care if the backend is 24/7 and it still works on COBOL like most banks. But what is inevitable is that my father, if I ask him, define for me a financial product, he would define a mutual fund or an ETF. My generation would already call an app the financial product. And I think that is an inevitable truth. All money, or it's the same $100 trillion are going to move to be managed in what is today insurance companies and old stack financial institutions that don't have a customer experience are going to be led by product-led companies. So those two truths, in my view, are inevitable, and they're the essence of what we do in eToro, right? Then two others which are related but much bigger is AI. I don't know if you've already installed your OpenClaw or not, but if not, I'd highly recommend it.
I use Claude Code. I haven't installed my OpenClaw yet.
I highly recommend it. It is completely something different. It has a soul and a personality and a memory. Eventually, I think Claude Code will probably do something similar. And just like in meme coins, beware, don't install it on your computer, install it somewhere on the cloud, and don't give it too much access to your personal stuff. Because I told him, find a way to open me Ethereum and Solana wallets. He found a way. He opened it just from text in my WhatsApp.
Wow.
He opened the accounts. Then I told him I want to trade prediction markets. Find me a strategy for prediction markets, and tell me what I need to do for you to actually trade it. And he told me, send me some ETH. I'm going to convert it to Poly, to Matic. I'm going to then convert it to USDE. I found a strategy in my social network Maltbook that looks at, and I'm like, if I would have told a talented employee in eToro, do all of these things for me, he would have told, come back next week.
Yeah.
It like did everything, opened the accounts, told you where to transfer the accounts, created the strategy, started trading. But then for some reason he disappeared. I'm now looking for him. But it's super like, so AI is something that nobody's like, it is going to be everything from your financial advisor to your personal advisor. I've never experienced this speed in learning in any technology that I've ever seen, and I've been dealing with technology since, yeah, I remember myself.
And Yoni, this is the last question I ask every one of my guests. I'm 16 right now. If you were to give one piece of advice to a 16-year-old today, it can be life advice, career advice, whatever kind of advice you want. What would it be?
I would say family first. Like, don't be confused by chasing money, especially if it's over your own family and relationships. At the end of the day, we're human, and that's what makes you smile at the end of the day. So, I cherish my wife and my 5 kids, and many times, in order to succeed in business, you need that comfort and love from family, which is super important. It always surprises me to see extremely wealthy people that have sort of neglected that part in their life. Sometimes they got back to it, sometimes they don't. But that's one key lesson I'd give my son.
And it's been a pleasure having you. I really appreciate it. I'm really glad we can make this happen. And I'm sure a lot of our listeners will enjoy it.